All right, we are back for another Friday financial wrap up with Mr. Michael Zuber. How are you, Michael?
Oh man, I'm doing well. I look forward to these all the time. It's pretty awesome.
Same, man. I feel like I've been with you every week for the last 3 weeks, so I miss you, bro. I haven't seen you like
I know
you
what's
know.
going on.
I know this is for May the 10th, 2024. It's actually Mother's Day weekend. So happy Mother's Day to all the moms out there that get it done. Let's get right into it. Freddie Mac second. What is it? What happened?
So Freddie Mac actually announced that they want to be launching a second mortgage product. Now, this is interesting because historically they've only done firsts. What they're doing here is they're recognizing that there's a lot of owners that have been locked in. Their firsts are at 1.8, 2.1, 2.3. They also have a lot of equity, but they're not accessing that equity because they don't want to do a cash out refi. And it's a horrible financial decision, right? Take out 50K, but all the debt goes up to the 8% or whatever. So Freddie Mac has identified a hole in the market, and they put it out to bid. I think they have 30 days to go through this. This seems like it's going to happen, and I find it odd. I just find it odd. Meredith Whitney thinks that this product could theoretically unlock $1 trillion by the summer. As somebody who's been studying the economy for a long time, as someone who called the stimulus ballers correctly, if we unlocked $1 trillion by the summer, like August, what is that going to do to inflation? Now, as I've since talked to more and more mortgage brokers about this, it seems like Meredith Whitney's call of $1 to $3 trillion is unlikely, to use their words. But I do think it's interesting that more and more lenders are trying to find ways to give people access to their equity without refining the first. So I think it'll help some people. Honestly, Ty, I think this is going to hurt a lot of people. I think a lot of people will use the home as an ATM, and they will do stupid things. I hope that's not true, but history says it will be. So I think it will help some people, pay off credit card debt, maybe do that addition. But I think there'll also, unfortunately, be a lot of people that go, "Oh, cool, free money." And that's not how it works.
Very interesting too. And my 2 cents on it as you're rolling it out, I'm thinking a couple things. Probably home improvement business, Home Depots and Lowe's probably go bananas and do really well. Yeah,
Yeah, probably.
probably. And then the other thing I think too that even more so is I think it continues this low inventory. I think it just sticks people in just sticks people for another 7 to 10 years, which we don't see inventory loosen up. Your thoughts?
I think you're right. I think there's a historical number. They call it turnover. And turnover in the United States real estate market has been remarkably consistent at just about 8 years.
Yep.
It will take a while to move, but we're going north of 10. We're going
Yeah.
north of 10 years. And you're right. The basically, if you give people access to the money so they can improve their current crib, yeah, they're going to probably stay longer. You're right.
Interesting. Very interesting. Well, something to keep an eye on. I think we will circle back in the coming weeks as this thing actually, if it goes forward and what happens, we'll take a
Yeah.
look at that. Let's keep going. The show notes. Billionaire Barry. Who is Billionaire Barry, number one? And what happened this week with Billionaire Barry?
Billionaire Barry Sternlicht is his first name's not billionaire. It's Barry Sternlicht. We call him Billionaire Barry because he's the only billionaire that I know who brought PowerPoint slides to CNBC. He's brought PowerPoint slides to CNBC multiple times, and I just chuckle. Right? If you got to bring slides to communicate your point, you're probably feeling stress. So Billionaire Barry had a rough year. He had to shut down his mortgage business. He had to stop paying his dividends or distributions. He sold a bunch of homes to raise cash. And now, today, Billionaire Barry is out on the airways saying, we are going to have one bank failure a week because of commercial real estate. And yeah, Billionaire Barry, one bank failure a week. That's what Billionaire Barry's up to lately.
What do you think that's accurate? The one a week, or
No,
do we start to see banks fail, or what is your
yeah,
thoughts?
no, we will absolutely see banks fail. We've already seen one this year, a couple weeks ago. Um, the Fed has identified like 242 banks, typically small, sub 10 billion, that are at risk. So yeah, we will undoubtedly have more bank failures. No, there's no question. Do we have one a week? That just doesn't logically make sense. It just doesn't feel that way. But we could have 20. We could have 20 go this year for sure.
Interesting, very interesting times. I told for the viewers and listeners, I told Michael I have a connection to Billionaire Barry in that specifically that portfolio of single family homes, Starwood, and that was a roll up. It was actually one of the original Waypoint Homes was a hedge fund based out of Oakland,
Ah,
California. They
yeah.
did somewhere in the neighborhood of about 5 to 10,000 homes, and I worked on a lot of acquisition, a lot of deals, probably several hundred deals from about 2010 to 2014, of which
Wow.
all that portfolio now is a part of Barry's single family home portfolio. So small
Wow.
little tidbit there. So
That's cool. Small world.
small world, interesting. I had to verify it though before I made it on the show with
Yeah,
Michael.
you
So
wanted to make sure it was good. Yeah.
yeah, make sure that Waypoint Starwood Homes ended up with Waypoint's
Yep.
portfolio. Let's continue. Grant Cardone. He's an interesting character. What's going on with Grant? What's the latest and greatest with Grant Cardone?
I got to respect somebody who makes a call and sticks to it. I think we talked about this about 9 months ago that Grant Cardone came out and said he's basically going to forget getting lending. He's going to buy things for cash, right? He's going to raise funds. He's going to just buy. He's not going to deal with 8% mortgage rates. He's not going to deal with that. He's just going to buy with cash, hold on, and then refi whenever he can later down the line, years down the line, probably. And I thought that was a really interesting call, really interesting. He has the clout and the ability to do that, right? Not many people can do that. And the reason I'm giving him a shout out here is he actually pulled the trigger, at least according to his Instagram feed. He closed on a pretty significant property in Florida and paid cash. So yeah, I thought I respect somebody who puts a call out there and then executes to it. It's just not put out there for clicks. So yeah, Grant Cardone's freaking buying multifamily cash. How many people doing
Interesting.
that? That's crazy.
Pretty wild. And I think the thing about with Grant is that he just did he figured out the component to leverage his brand to be able to raise capital, right? And it feels like he was so far ahead. He was doing that 10 years ago that he really figured out, let me raise capital, Cardone capital, and
Yeah.
small investor, big investors, and now even institutional money, I'm guessing too, right? It has to
Yeah.
be.
Yeah. I don't know. I mean, according to him, I don't know how many funds he has. He may have institutional funds, but he he has unlocked the small time investor. So, and he calls his shots.
Yep.
And you probably don't like everything he says. I certainly don't like everything he says. But in this, I'm going to give him his flowers. He called his shot, made the shot. Good for him.
There you go. Grant Cardone on the move, folks. Let's keep going. Let's talk about mortgage rates and the spreads. And specifically, we talk about rates all the time. They pulled back a little bit. We saw them come down, last week. It feels like we were on probably about a 6-week high last week.
Yeah. Yeah.
So talk about rates and specifically too, more so on the spread. What did you see this week?
Yeah. So let's talk about spreads. What is that? That's basically the delta between the 10-year and the mortgage rates. For the longest time, the historical average was 180 basis points. So what does that mean? You take the 10-year bond, you add 1.8. So if it's 4%, mortgages are 5.8. That's what a spread is. And over the last year or so, we have seen that spread widen to almost 310 basis points. So, add 3.1%. As the market is starting to believe that the Fed is done hiking, we have started to see the spreads come in. I think the last time I saw the spreads, they were down to like 270 basis points. So again, a lot of the give back that we saw in rates this week was the spreads tightening a little bit. And that's a good thing, right? We will eventually get back to the long-term average of 180 basis points. It's just going to take a while to get there. And again, it probably relies on when the Fed starts cutting. But yeah, spreads are coming in. Spreads are coming
Interesting.
in.
Very interesting. So again, something to keep an eye on. Let's talk about Jerome Powell and what you deemed as the Powell pivot. What is the Powell pivot? Jerome Powell, what happened?
Yeah, so I really do believe Jerome Powell has pivoted. And what do I mean by that? I think for the longest time, Powell has been single threaded on chasing and beating inflation. What he said in the last 24 hours, might be 48 hours now, we now are going back to our dual mandate of stable prices and full employment. That's his pivot. He's basically saying, watch the job market. If the job market weakens, we will cut. That's what he's saying. He wasn't saying that 2 months ago. He was like, damn it, damn the torpedoes. We're going higher. We're going to beat inflation. Forget the job market. It's all about beating inflation. This week, he pivoted and he's now telling you that both are important. And yeah, I think he pivoted, no question. So now both are important, stable prices and full employment.
Interesting employment. So speaking of employment, what happened in the job market this week and what are you seeing happening? What's unfolding there?
Yeah, I think the job market is very early signs of cracking. Something we didn't get a chance to talk about last week because you were enjoying some time with the family in Mexico was the Friday jobs numbers. The Friday jobs numbers were weaker than expected, significantly so. I think expectations were 240. The previous months were 310, came in at 175. So a significant miss. Also, unemployment rate was forecast to stay flat at 3.8. It actually went up to 3.9. So job market seems to be cracking. And then just yesterday, Thursday, we got the weekly unemployment claims and they popped, right? We were trending in the low 200s and then they just popped to 238, I think, or 231. And that's high from last August. So again, we don't freak out about any one data point, but we've got a couple of data points about the job market not being as strong as we thought. So if that continues, you could see the Powell cut because the job market is getting weaker. So yeah, the job market's important.
Very interesting. Very interesting. So let's put a bow on this and what rates, obviously you called it over the last several weeks. Do you still think we see 30-year mortgage rates bounce around between 7 and 7.5 and in the mid sevens, or does
Yeah.
that feel like that's the new normal?
I think it does. It certainly does unless the job market cracks.
Okay.
If the job market cracks, we're going sub 7 and probably going sub 7 quickly.
Okay.
I think the market is like waiting on pins and needles to dive under 7. I hope it doesn't happen because I know what's going to happen. Rates go sub 7. We unlock all of this demand, this marginal demand that's just sitting. I mean, how many people do you know
Yep.
that are like, I'm waiting for rates to come down. I'm waiting for rates to come down. I'm waiting for rates to come down.
Yep.
Man, it's going to be wild.
So potentially we go we go over 4 on the jobs unemployment.
Yeah, I think
Potentially
4.2 is the magic number.
4.2 is the magic
4.2,
number.
we got a problem.
We see 30-year mortgage money go sub 7.
6.5. Yeah, 6.5. I mean, it'll go fast.
Got it. And then we get into kind of the crazy town again where
Yep.
5, 10 offers, 20 offers on just
Inventory will disappear overnight. I mean,
and
right now we're
inventory's not coming.
celebrating. Yeah. New inventory is not coming. We're seeing inventory rise because rates are over 7. This is
Right.
exactly what we want. We want rates over 7 so the market slows down.
Yep.
The job market cracks, the Fed freaks out, we go to 6.5 mortgages. I don't want to go back to that environment. I just don't. I don't want to go back there.
Very interesting. So for the one rental at a time investor, or the one rental at a time realtor or mortgage professional, people out there, what is your thoughts on opportunity right now? What is Michael Zuber looking at as we basically wind down spring, we start to get into summer selling season? Where's the opportunity?
So again, I'll just talk about where I'm looking. There's really 2 different spots. So you and I are a part of a series called Buying Vegas. Very likely going to buy a single family home and make it a midterm or put an ADU in back, something like that. So We are going to be looking for a home that's not perfect. I'm a firm believer that the perfect properties, clean, FHA, VA, passable, below the median, we're going to sell like hotcakes. I want to go find the ugly duckling that's been unloved. I'm going to get a great price. I'm going to do what I do and, write disrespectful offers and eventually get one. And so that's what I'm doing. So today for housing, days on market over 30 days, ugly properties. I think the bigger opportunity, and I hope people hear this, and I just did a call this Thursday with Jonathan Twomley, who's a syndicator, multifamily syndicator, $300 million. And I let him know that I think the multifamily, the 5 to 40 units, is going to be the greatest real estate wealth of my lifetime in the next 12 to 30 months. So next year to 2.5 years, because lending's going to dry up. Banks are going to take haircuts. Operators who don't know what the hell they're doing are going to get out. We're going to be able to do creative financing. Maybe it's a 90% CLTV, the 50-40-10. Maybe it's seller carries. And again, I tell you this as somebody who did it last time. I didn't even know what I was doing last time. And I bought an 18-unit building for 50% off. Bought a 10-unit building directly from a bank, right? I know it's possible if you believe and you work for it. This time, I think there's a chance that Olivia and I could double with what's coming. And that will be good. So I would tell people to skill up, get in the right rooms, network. You've got to be networking. These multifamily opportunities won't be on the MLS for the most part. You got to meet brokers. You got to meet banks. You got to do the work. You got to do the work. You got to know your numbers. You got to get in right rooms, in the right groups. And I feel good about where Olivia and I are, but I really feel good about the community we built, one rental at a time. We just got back from a keynote presentation in Portland. And one of the things I love to do is give out these black and gold cards. And I think I had to rattle off like 12 or 13 names. People are doing it. People are sending me notes, Ty. Hey, great. Thank you for the disrespectful offer. That was the prod I needed. I got a 50K haircut. I got 20K closing credit, this, that, the other. I know it works. I'm seeing it almost every day. So I just need people to believe. I think we are suffering from lack of belief. I think that's what we have is we've given up, and I don't believe in giving up. So I think there's a lot of opportunity coming, and I believe it will be the largest transfer of wealth or the wealth opportunity of my adult lifetime. So I'm excited for what's coming, frankly.
I love it, folks. I love it. You've heard it here, folks. If you see value, if you like what you're hearing, what you're watching, please subscribe, like, share, comment. Michael, any parting words?
Do the work. And of course, happy Mother's Day.
Happy Mother's Day. That's right, folks. Thanks for watching. Have a great weekend. Thank you, Michael.
You got it.